Everyone calls themselves SMC traders these days, right? So let me tell you exactly what they do every single time in the market and why they keep getting losses. They mark this entire structure in 15 minutes time frame. They mark these two order blocks also in 15 minutes time frame. So to take trades, they go lower and lower, usually the 1 minute time frame. So they just zoom in 1 minute time frame and then they look for entries. So what do? They just mark random structures. So for example, once the market mitigated this 15-minute OB, they think that this is a torch. So when the market goes up and takes this completely insignificant minimalistic structure, they just consider that this is a torch. Some people consider this as breakout structure. So they do all these sorts of things. And then when the market comes back down here, they try to take trades from this tiny structure. So this is what most people do. So as you can see, what happened? The market completely invalidated this entire structure. So what happened behind the scenes was that the market was just accumulating liquidity, right? Obviously, if you're taking entries in this order block, you'll get tens and hundreds of losses, right? Some people even mark these order blocks and then they put 2 limit entry orders right here. So I have seen this many times than I count. So they just put 2 limit entries and for no reason, completely no reason, they get 2 losing trades in a single day. So this is the problem. This is the mistake most people who call themselves SMC traders are making in the market. So I'll tell you guys the proper way to trade 1 minute time frame. Okay, look at these two structures. These two structures look exactly the same, right? Consider that these two structures are happening in 1 minute time frame. What's the story here? The market mitigates an 15-minute OB. So a 15-minute OB was mitigated and then the market broke this low. So the same thing happens here, right? So I have marked that this BO was as invalid. At the same time, this is a valid breakout structure. So what's the reason? Why did I mark this as a valid breakout structure and this as an invalid breakout structure? The answer is very simple. All you have to do is take out your fibs, mark it from the high to the low of the structure. So do you see 50% pullback right here? Of course you don't. But if you look towards the right side, you can see the market has given us 50% retracement. So that means that this breakout structure is completely valid. Once the market breaks this valid breakout structure, then you can for sure trade any sell entries when the market comes up. So once this happens, there is a good chance that, let's say 80% to 20%, the market will continue towards the downside. So this is how you should take entries. So if you look towards the left side, the market did not give us 50% pullback, right? So this is an invalid breakout structure. So when the market breaks an invalid breakout structure and you trade the pullbacks, let's say you take sell entries, there is a very good chance that the market will go up once again, break this high. So usually what the market tends to do is it goes up, breaks this high, and then the market gives us a breakout structure right here. Only then the market comes down. So this is what happens. If you notice properly, this is what happens every single time in the market. It's like a pattern, right? So this happens all the time. So this is how you should do, guys. Just don't take this completely small insignificant structure, and once the market breaks this, if you take sell, then that's on you, right? You'll get tens and tens of stop losses. So I'll show you guys a market example. Okay, so this happened today, and if you look here, the market has given us a breakout structure towards the downside. So the market is in downtrend for both 15 minutes and 1 minute. So let me use the replay tool. Okay, all right. So if you see, if you don't know how to mark an order block, all those things, I have already made a video on those things. Check that one out. So let's look at 1 minute confirmation entries. So I have marked this order block and I have marked this order block. So these two are marked using the 15 minutes time frame, right? So to take lower time frame entries, I'm currently in the 1 minute time frame. Okay. So let's see what happens here. All right. So if you see here, there is an inside candle. So when the market breaks an inside candle, that's completely insignificant, right? So that doesn't mean the market is going to come down. You still have to wait and see more confirmations. Okay. So the market goes up, the market breaks this high. Let's mark that as a minor structure. Okay. So the same thing happens once again. The market breaks an inside candle, completely insignificant. We will completely ignore this. All right. So if we see here, the market has given us a proper change of character. So just to verify, I'll do this step once again. take your fib from this low to this high. The market has given us a 0.5 retracement. Do the same thing once again from this low to this high. A clean 0.5 retracement, right? So now once the market has broke this low, in this case the market sweep this low, but it's completely fine because the trend is in downtrend, right? Okay, so how should you take entries in this 1 minute time frame? So we will be taking sell entries here once the market goes up. So the first thing you should do is once again take your fib, put it from this high to this low. All right, so if you see here, the market has only two valid order blocks, right? So this is a valid order block and this extreme order block right here is a valid order block. So how should you approach this entry? Usually what I suggest to most people is just put your limit entry right here. Extend this limit entry so that this covers both these order blocks like this. So this is the safest method to trade the 1 minute, right? So let's see what happens. So clearly the market wants to go down. It gave us a breakout structure. So now the sentiment to go down is very high, right? So let's just wait and see how this plays out. Okay. So this is the reason why I say you should put your stop losses for both these OBs, right? This OB was invalidated, but still you are in the trade. Let's see what happens. Okay. Let's aim for 3RR. Okay. So we got more than 3RR. So guys, if you see, this is the right way on how you should take the LTF entries. You should not just mark these insignificant structures like tiny structures like we saw before, and you should not trade them, right? So same goes here. You should not take these inside candles and then consider them as change of character. Only a strong breakout structure and then you can look for sell entries. So guys, this is all this video is about, and I hope you learned something new. See you guys in the next one.